What is going on, everybody? Happy Monday, September the 8th, 2025. Glad to be here on ETF edition of Trading Trends. We'll recap the day and the week. There were some new all-time highs today. I'm looking at gold. Also, the gold miners, they finally got to that resistance point, the new all-time highs. We'll get right into the doc here. What do you say? Let's get into it. Also, it was a big international trading day, a lot of activity in those. So let me just pull up my thing here. Give me a sec. Okie dokie. Should be popping up soonish. Let me see. Hope everyone had a wonderful weekend here. We saw the birds on Thursday take care of Bennett as they usually do. It's been fun. It's been real. And yesterday's games were wonderful. Okay, let's get into the trends that are also wonderful. Japan, like I said, a lot of international activity today. Japan and bonds. Bonds got a bid today. We said they were going to look good last week on Spaces, I believe it was, and in our show. TLT looked good. It had some strength today. And the silver miners all advanced 2 standard deviations today. So obviously Japan and bonds move very differently, as do silver miners, because they're cracked out, and all of these assets move 2 standard deviations. So big moves for all. We'll take a look at each. Also, Argentina, don't know if you guys looked at this one, a 10% collapse. They had an election last night. I'm not going to get into it more than that outside, in terms of the news, but they had a big political election yesterday, and the market absolutely sank 10%. We'll take a look at the chart. Utilities in Vietnam also had a decent drop today. Did utilities in Vietnam, and new all-time highs, like I said, for the gold miners, for gold, for XLC, the communication ETF led by Google and Meta. Japan is now bringing out 2 new all-time highs. We'll take a look at that chart. It's an important one. And Canada. Canada previously thought, it's got to be rising with oil since it's a commodity-rich country. Oil's not doing wonderfully, and Canada is still hitting all-time highs. And, of course, financials is a part of that. They got BMO, RBC, a lot of strength underneath. Okay, let's into the intraday tape, and then we'll do the, the peakish view and so on and so forth and what have you. Oh boy. All right. Before we get into the intraday tape, that SPY moves. Tesla gave back 1.25%. Broadcom up 3%. Robinhood, a massive 16% move today. Stock looks wonderful. It did have a little bit of bloom shed off the rose before, but wow. Today, a big move. If you're long hood, congrats. Up 16% was Robinhood. Palantir up 2%. Amazon up 1.5%. At healthcare, that dog added 1.5%. Gold, we'll talk about, so I don't have to dig that up anymore. And Oracle stock also looks pretty good, up 2.5%. As we go into the intraday tape, SPY today traded below volume. That's not atypical for a Monday in September, especially after football kicked off. I'm guessing New York traders were all watching. I guess the Jets lost. Jets do Jets things. And Giants did Giants things. But anyway, so the tape, we opened here at 9:30 a.m. right at about 6:49. I'm rounding. And then we had nice highs here at 11:30 to 6:50 even on SPY. And then we started shedding underneath VWAP, which was at 6:49. And then we troughed right here at 6:47.5, got our legs underneath us right at the 3:30 final 30 minutes. And we started to get above. We advanced above our VWAP, 6:48.5 for a nice 6:48.88 close. As I zoom out and I go to my 1-year view here. So again, I still love the levels in here. I still say for the next 2 weeks or so, just because this is like a car that's going 85 miles an hour. There's no one ahead of you and behind you, and the market has everything kind of in clear view. Now I'm starting to maybe see a little bit of traffic, just you can't absolutely floor it anymore. And that's evident to me in more of the constrictive RSIs here, sub 67. And stochastic momentum X just not advancing, but just starting to have a steady decline. Just tells me the market has to take a little bit of a breather. Still absolutely great looking candles and very strong closes, typical of what we've seen today at 3:30 to 4 p.m. We've seen that rush of buying institutionally pretty much every day. Folks get their orders at 9:30 in the morning. Financial advisors work this order all day. At 3:30 p.m., they got to get the grandma in. I don't know, maybe NVIDIA, maybe not, but they have to get the order done by the end of the day, and the market usually will trapeze and go over VWAP at the end of the day. So as I said, over the next 2 weeks or so, I still expect us to hug right around that 642 to 643 level, which is a percent lower from here. So I like that wiggle down to the downside. I love your entry and your risk reward at 643. It seems very promising. If you get a scary sell-off, it probably takes you down right to that 630 mark, and that's where buyers, I believe, step in. That's what they did on August 20th, and then even let it get that close on the 2nd, 6 days ago. And then after that, to the upside, after we start to digest and we start to head towards that 640, worst 630 level, I do think our forecast for early October, I would still see about 655 for SPY, which would be a new all-time high, as far as the 652.20 that we set just 3 days ago. So nothing really, crazy to me in terms of charts. Also, just in terms of SPY, this has been absolutely stupendous. The worst RSI we had was August 1st. We sank to a 48 there. We've been above 48. You can call it, around at almost 50 RSI since April 24th. This has been an extremely strong market. Just 2.5 weeks off of that low. It's really been kind of standing room only to get in, and really a belief why I don't even think we'll get to 630. But if we do, they will step in and buy it. Okie dokie, artichoke. Let us get into the big moves today and see if there's any meat on the bone for these trends. Let's get into it. EWJ at all-time highs. Wow, wow, wow. A big move today, up 2.25%. That is large for EWJ. Still just on the top of its Bollinger Band. Don't love to see that. The RSI had been higher just a couple of weeks ago, and now we're barely pinching 66. It typically, for me, says I can get a move right to the 50-day moving average, and here that's 76.70, so you lose some gains here. But overall, what can you say about Japan? Obviously, we all know they've been stuck for 20 years, range bound. Here, let me even zoom out. We can see it here. Basically, we had not been, from this 2007 levels all the way till 2021, and then it had give back, and then really in December 2023 started getting some legs underneath it, and it has some ugly sell-offs on August 24 and April 25, and now here we are. Let me get back here into the one-year view. These EWJ bottomed April 7th. It was an ugly sell-off, got all the way to 20 RSI with the SPY low. This one hit $60, and now you see a beautiful ascent to 81, essentially. So this I would have liked if you showed me the chart 2 days ago. I would say, I would say enter this one under 78 quarter, which is your 21-day exponential moving average right here where my cursor is, and really a level that EWJ had not seen just up until 3 weeks ago. And then I would say my target is 81.10. So right here, I don't love chasing it for 20 cents because it did basically the whole move in 4 days, but market's going to market. So overall, I think this will obviously continue to still go higher, but some zigs and some zags here. You are getting some vol expansion, which will continue with the big candle today up 2.25%. It closed just 11 cents off the high. So these guys were bidding it and almost upset that it, ran out of time. And this is above 50 RSI trading since July 22nd. So just a little bit less of a track record than, say SPY or maybe just later rotation. But nice looking chart here. I wouldn't chase it here at 80.81 handle, like an entry closer to 78 quarter. You're going to have to be patient because momentum traders probably chase this one up. Next, TLT. We said before, so I want to get tactical with this one on when we set it and how and everything. So TLT, we were talking about it on Spaces last week. We should be on tomorrow if you're available. It's 11 a.m. Through the chart report that we do. And we said right here, it was August 21st. I said, buy this. Let me put my cursor. Are we seeing the same screen? Yes, it is. So August 21st, the thing looked ugly. VWAP that day was 86.40. I said, get in under 86.90, and I think this should go to 89 even. Okay, and that was August 21st, and I said that with a September 4th target. So there you go. And today's the 8th. So September 4th, it was at 87, and then you needed it. Always give it a little bit of wiggle room. It's art and science, and hit 88.60, and then boom, today essentially 89.75. You round it to 90. So here's an interesting thing. Fed's supposed to cut very soon, 25 bips, very likely. I know there's a 10% chance that they do a 50 rate cut. I don't think that's likely. You're starting to see the 200 moving average start to stabilize here at 88.19. It's actually not dropping for the first time in quite a while. And also, you see the RSI here at 66. I had said before from the same episode, our bonds are going to start to be so bad, it's good just because every squirrel gets a nut in this market in terms of the roulette wheel. But this doesn't have, earnings like NVIDIA or a bloated valuation like Palantir. Do you really want to get into bonds when anything else has, maybe a more attractive yield through growth? And this squirrel is getting a nut here. The only thing I will say, and you want to see a breakout, and I do like seeing the RSI going north of 65. But what has happened when this starts to flirt with the 200-day moving average, and look at the track record going back to the 52-week high last September when this thing was trading its own par, or 102. I'll say par because 100, but this is an ETF land, so it really doesn't make it a lick of difference. But if you see here, when it gets above, this is an easy technical analysis thing for me. I want to see it hold above the 200-day moving average for a week, because it hasn't been able to do that since September 2024, and that's just a simple test. That's all I want to see it do. This, and after that, they did it here, and then the 6th day it failed. So I'm even giving you a wiggle. I want to see it happen for a week. September 5th was the first time. Let's see where this is on the 12th by the end of the week. If we are still holding 88.20, things change. However, I really don't think that's the case. If this was the call I had said from August 20th, 21st, right here when they were trying to find that bottom with an 86 handle, and I called, that 2.5 point move looked to be in the charts, and now we're here 89. So now what? I do believe this will have a 2-week move lower to right about 87 even. I do think 200-day moving average will be just like its prior track record, and it will give way and will trade right to its 21-day exponential moving average, which is also its 50-day moving average. So bonds really just coalescing and making convergence there, 87 even. I do think it happens in about 2 weeks. Just quickly, price of bonds go down, which means rates go up. And that's about it. Maybe puts a little bit of a digestion, a little bit on the market overall. But overall, this is encouraging. I'd like to see that RSI go out to see if this has any chance of holding. But it's had these kind of rallies before. It might even stay here a little bit longer. Like I said, 3 days, 89 handle for TLT, which would be rates where they are, and then start to give way. But yeah, that was the call on bonds. I'm glad it worked out to fruition. When the charts are clear to me, that's when, it's most lucrative. I hadn't been covering silver miners, and these are the silver junior miners, so everyone's really cracked out. I do pay attention, though, to things that have price, momentum, and volume, growing volume. So here's the SILJ. It's been trading a lot recently. This thing hit new 52-week highs today. Let me go back to the all-time highs of this puppy. This thing, all-time highs are way back in January 2013. And that is useful for traders because there's overhead for that. GDX, a lot of folks are saying gold's played out. I can't play it anymore. Obviously, trees don't go to the sky, but there are blue skies ahead for gold, and they want to have something with a level instead of just having a Fibonacci retracement for a target. So what they did was that you could go into GDX, which had, and we'll look at the chart, GDXJ, soon. And then it reached those targets now, and that's an all-time high. It's just kind of a simple way if you're doing relative, absolute trades. So here, if you're going back 12 years on SILJ, and I am, this could go back to 2160. So you got another 2 points of upside if you're zooming out. Going back to a 1-year chart here, man, this thing can move. This thing bottomed New Year's Eve at $10. So you got yourself a 2x, a double. It's run a lot recently. I personally would not chase it here. I love an entry around 17.5, which would be $2 reduction. So long term, I do think this probably does get to 21.5. Love the RSI too. This thing is rolling right here, similar to what it did back in June. You guys start to see these candles go a little bit small, get a little bit smaller, and start rejecting the high. So they took it to 1957 today, and they closed at 1948. So that's still pretty strong. They probably even take it a little bit higher today, tomorrow, but I personally wouldn't chase it here, and I love an entry at 17.5 in about 2-ish weeks. You're going to have to be patient. New 52-week high for that one today. All right. If you have a ticker or something, put it in. A lot of stuff moved, and if you like what I'm saying, subscribe and whatnot. Let me go to what we talked about earlier in the show. This is not a typo. That is a 10.5% move lower. It reminds me of Mexico or EWW 2 years ago. Feel bad for these countries when you have a big political fallout. It's very, very hard to overcome. But let's take a look. And this is what I mean. Argentina, a superstar up until we had our nadir here, our fall, our swoon in April. And then really it had 1 week in purgatory, and they took it right back. And this thing was the belle of the ball here in May, if you recall, $96. And then stuff really started to give way. A lot of markets were in purgatory from July to August with a rising 200-day moving average. And now, just as of today, the 200-day moving average is starting to go lower. You see it also. That's not coincidence, and tell me that there's no meaning in charts. Look at the lows today with a 10.5% drop, which is pretty volatile for any nation, reaching RSI of 27. That's oversold for the first time since its 52-week lows in April. Look at the bottoms. Today, they sank it to 70 even. The computers, banks, people, your grandmother, whatever, money came in and said, let me buy that. Where are the previous lows? On April with the SPY 52-week lows, it was right around there. It was 67.75. So within $3 of those lows, there's always, power in the charts. Had I not known about this election yesterday, I look at this chart, and you don't like to see 79.5 give way, and they don't like to see 77 give way, and then this gap down. So what's very likely to happen, this is going to have its work cut out for us. The low today was 70 even. They did take it up to 71.40. Maybe you're going to be really patient. I would not play this for a long. It possibly could be exhausted to the downside. If you want to make money in a scary way, you could sell the 69 puts. I really don't know how liquid they are, however, though. I don't think this is at all liquid. I really want to capitalize the move, a multiple standard deviation move, 3+ on this. It maybe has a dead cat bounce over the next 2 weeks. I personally, though, wouldn't play it just because it's so overdone. I think possibly this gets back to $80, but by no means am I buying, at the money calls or even the stock. I think this is going to be frustrating to folks, and the momentum has been falling since it broke $84 August 19th, and now folks are saying, yeah, the story is as bad as I thought. Does it possibly get, to 65? I really don't think so. Maybe. I really don't think it breaks, like the 68 handle, and I think it bottoms around, this week. All right, but if you're long Argentina, yikes. Mercado Libre actually didn't get, it was down 3%. The institutional main holders of Argentina got also hit pretty hard, but a really historic day for Argentinians stock. Okay, of holders of stock. Next, XLU fell today. Bonds, like I said, got bid up. So yields fell, utilities fall 1%, which is a big move for utilities. Remember, these guys were all the rage August 5th, which is a 1-year anniversary of Yen Mageddon. We hit $88. And this is almost like similar to Argentina. You have the rolling, the moving averages, and a lot of things roll over starting August 25th. You got the 200 moving average here at 80.20, and the RSI as low as it has been since its 52-week lows back when it was having its scary April like the rest of the United States. Now what? Not so fun, I would say, in utilities. There's maybe worse areas that you could be in. Look how many red days in a row here. That's not an error. This has not had a green day since August 27th. So if you've been long utilities, yikes, you've been getting canned for every day since then. This probably tries to base. Like I said, I don't think the 80 is going to break. I actually think this 82 will hold. The candles are looking ugly. I will give you that. It's not good to have multiple standard deviation moves when you think it's the end of a move, but it could be the end of the flush. That being said, I do think 82 will hold. And then I think it has a bounce to about 84.5. And then that's the move for utility. So I do think some good times are coming, but it's really had quite a fallout above 50 RSI trading since April. And now it hasn't been able to do it since for the last week. But I'll say this is more of the a star performer having a bad week and an overall very good season. And then the next one, like I told you, there's some international names trading today. Vietnam did not do so well today. Vietnam, not a very actively traded ETF, a big move today. These guys had 52-week highs to 18.5 was the stock level on September the 4th, and a quick move lower. You kind of actually see that right here in the divergence from RSI. Yes, it did get to 70, but I want to see it get to that kind of euphoria here, and that's at least 76. And immediately my spidey senses tingle. I say, what? We can drop to that 50-day dramatically, and it looks like it's headed there. Then it was 1646. And the stock, like I said, was 18.5. So that's a big $1.15 move. Say now what have you for Vietnam. I think it has a nasty 2 weeks. I think this, I don't love the chart here. I think this gets slightly rotated out. You've seen in a couple of charts that 50 RSI give way, and some of these names have to rediscover themselves, if you will, and investors have to rotate those dollars back in. I think that's what happens to this name. And I think this just kind of zigzags around 17.5 for a while, so right where you are. So overall, not a bad name. I do like the entry under 17.5, but don't be shocked if you do get possibly a visit to about 1680 or so. Vietnam, an ugly day though, down 3 1/3%, a big move lower. Okie dokie. Top 3 gainers of the past 5 days. Let's recap the week, including today. GDXJ, man. We were talking about at the open of the show, new gold, new all-time highs for GDX, gold, XLC. Today we're going to feature the GDXJ, and this is not an all-time high. I don't think this is an error, from the data provider. You go back 12 years, there's overhead on this thing goes to 100, and then you go to the all-time highs from 2010 is 180. That's a 2x from here, basically. Folks are addicted to stuff like this. I would not leave the juniors, and this one has like diesel fuel compared to GDX and GLD. And if you hear me talk on spaces and stuff like that, GDXJ is the star. All that being said, I'll tell you to chase it if there's a setup. They look like they want to take this one higher. This has not had this type of euphoria all year, and I say that because it's over 70 RSI for 8 days now. So this thing really, once it left the station at $77. They said, no, we're going to take this higher. I personally would sit this one out for about 2-ish weeks. It's going to probably be painful. I would wait for the area of the prior breakout. So I would wait for an entry at around 77, 78 in about 2 or 3 weeks. But you're going to have to be patient. This thing's, like I said, overbought. Candle looks great. They took it to 86, closed it 50 cents off the highs. I don't think it'll last forever. I do think, like I said, 78 is where I think you enter with this area being your next high. But fire week, they're taking it higher, up 8% in the past 5 days. The number one ETF anywhere is GDXJ, up 8%. Next one, though, and it's good to see, are the biotechs. We said every squirrel gets a nut in this market. Look at this one. This is a recent resuscitation, if you will. If you take a look at this, not like the charts that we've been looking at in terms of strength. This peaked a week after the election. Okay, on Veterans Day last year at 105 spot. And then really, this is when the Kennedy Health Czar news was announced. And then really they give it a kind of another dip and say, maybe it's not that bad. And then really after 12/12, no reason to own this until August 13th. And that was still really if you have the risk, in my opinion, if you have your risk count on, because I do love the 50 RSI trading above in that period because it really did have a nice bottom on April 9th at $67. But really, if you didn't want to get long, the reason why I say you still had a leash on it was because the 200 moving average is still slicing lower. I still do expect it to stabilize, similar to the move that we just saw with the TLT. But I do understand August 13th why you would enter XBI. Right here, you're having a nice momentum breakout. Obviously, you're getting back to levels we have not seen since the whole Kennedy news back in December. And a relative strength breakout. I like it for the direction in terms of the next week or so. Like I said, it's having the second best week after the gold miners. And last I checked, gold and biotech, not really related. Don't want gold injected in me, or do I? But the target here near term is about 95 for me personally. So, I loved it like around August 1st here. It was really showing signs around 88. I do think that 200 moving average will hold. It's going to be interesting to see. 87 even. I do think it hits its head like it is right now at around 95, 96 handle. It's XBI. I think it can go crazy. And then I do think it'll start to mean revert, just digest its gains at around 90. And then that's going to stabilize. And you're going to see another big base in markets and then more rotation. It's just what's been happening, man. It just charts. Biotech, the second best week of anyone after gold miners. Congratulations if you own XBI. Be careful looking within the basket. There's obviously all kinds of non-profitable companies in there. And then the third best place to be the homies. The home builders, up 4.5% over the past 5 days, averaging almost 1% a day. Today, just digesting, up 20 bips. You see big, dojis here the other day, and now today. What do we say? After having the third best week after gold miners and biotech. So similar, it did the whole move. And, this went from 113 to 120 in 3 days. So my target is right around 120, 121. The 52-week high is back from Thanksgiving at 126. And similar to what we just said, but biotechs, no reason to own it until when? Essentially, it was really out of purgatory August 4th, and it started to clear above the 200 moving average. Put in that 106 as a low, and then now we're starting to. It wants to get back to these 52-week highs at 126. Near-term target, as I said, right around 121. I don't think it does it this time. And then it mean reverts, probably digest some gains to about 114, and then that'll be your entry to get you to 120, 5 new 52-week highs, but that's probably closer to like maybe a couple of weeks. I was going to say October, but sometimes when this moves, it really moves. I think it has a nice 2 weeks, but I don't want to say the target goes too much further away than max 121. All right, home builders, third best week of anyone. Congratulations if you were long. So it's been gold miners, juniors, biotech, and home builders leading the way for the past 5 days, including today. The losers, and we said this area, this needed more time, energy. Some folks were bullish, as I said on that episode last week, and I said it just needs a little bit more time. I think it's going to frustrate, and XLE has been the worst place to be in the past 5 days. I'm not talking about Alta, Forex, crackhead ETFs. I'm talking about actual sectors, subsectors, actual funds. XLE looks not so great. So here's the deal. Don't like it. This group peaked near term last November at $98, and you still have a 200 moving average that's sliding lower. Here it looked good for a trade, for a bounce from 85 to about 90. You get up 5 points. And now I don't like it. I think it has a nasty 2 weeks. The charts have mainly proven very much right in oil and energy trading, to be honest. And I think this has a nasty 2 weeks, and I think it's headed to about $84. It seems like I don't want to say like all, foregone conclusion, but I really do think it's headed there. And it's been doing it for the past week after it had a 90 candle. Looks like it's going lower. An ugly candle. I mean, not an ugly candle. It's down 23 bips, but I see there's more downside. I don't think it's going to hold the line here at 48 on downside volume. No siree. A good thing, a feather in the cap, in the inverse of that. So the second worst area to be in the market is actually inverse. It was volatility. VXX down just a hair below energy. So if you were long VXX thinking that there was going to be some panic in the market, or for some reason, I don't know why, maybe you did like a duck race or something, but because surely you just don't look at all-time highs and think there's fear going to happen. But anyway, it's had a nasty week, down 3.5%. The 52-week low for these guys came on Friday. The 52-week low for VXX hit 34.5, and today down 1.8%. I think this has a very small dead cat bounce over the next week or so. Really no strategy around it. I think it probably gets to 37.5, so 3 points if you want. I mean, you probably sell the 34.5 puts. I don't think it really is worth paying for the risk. I really don't want to buy the 37 calls. Buying VXX calls has been an awful, awful, awful trade, even for the shortest time frame. You can read about it in Bloomberg, Wall Street Journal. It's an awful. You're better off doing index puts. So this is going one way. The last week has been emblematic and of that. And this, by the way, we're talking about strong RSI trading above 50. This has not had strong RSI trading since April 24th. As I said, we did this the exact inverse of the market. We said this market has been standing room only to buy since April 24th. Literally, that's no coincidence. This has been standing room to sell volatility, saying, yeah, I'll sell you that. I'll sell you that. I'll sell you that vol all day. Things are better than you think, and puts are just priced lesser than you think. That's volatility. And then the next one, we were talking about it because I had a nasty day today, but it's had a nasty week, are utilities. I'm not going to spend too much time on it because we just did, but utilities have had a nasty week, down 2.5%, and that is not insignificant for utilities. We talked about the setup. I actually don't hate it here. It's probably not going to pay you handsomely or anything in the next 2 weeks. It's tough to chase into something like this too, where the candles get bigger on the downside. So it probably does want to get to an 81 handle first. That's a better discount for you, in my opinion. And then it looks like it'll get to 84, which would be a nice 3-point bounce, but I'm not so sure about those 80. The highs go back to $87 anytime soon. All right, so the top 3 trades of the past 5 days, they've been all long. They've all been to the upside. It was long gold junior miners, congrats, and then long the XBI, and then long home builders. So some superstars, gold miners, some XBI just recently trying to resurrect, and then home builders, different altogether. So different rotations into different parts of the market, different timeframes, different areas, etc. We'll see if we'll be back with a video. I'm going to try and do one tomorrow or Wednesday. We'll see. But the next one will be a stock edition. Peace, go Birds. Not even a game time, but go Birds always.